Steve. Today, we're really digging into what's happening with global markets right now. There's this fascinating split between major indices, and also a pretty big piece of news shaking things up significantly in India. All this comes from a very fresh pre-market report we've been looking at. Our goal, as always, is to pull out the really key insights, the surprising bits, just to help you get quickly up to speed on these, well, complex forces. So let's just jump right in. Okay, starting with the U.S., performance there looks strong, right? We had that positive jobs data.
Yeah, really strong.
And it definitely seemed to boost things. S&P 500, NASDAQ both hitting new all-time highs.
That's right.
Even NVIDIA, which everyone's watching, hit a new high too. Though the Dow, it's lagging a bit, isn't it? Not quite the same story there.
Exactly. And that's what's so striking. You've got this clear strength in the U.S., but then you look elsewhere, like Asia.
Yeah.
And the reaction is much more muted, very mixed signals coming from there. They're just not showing the same enthusiasm. Take the GIFT Nifty, for example.
Yeah.
That Singapore indicator for India's Nifty.
Right.
Well, just hours ago, it was pointing to maybe as 60, 65-point higher open for India now. It's expecting more like 25, 30 points.
Oh, okay. That's quite a drop-off.
It really is, and it makes you ask, why? Why this divergence, U.S. soaring, others kind of holding back? Is it just different economic timings or maybe something else? Underlying worries in Asia, perhaps? Inflation? Policy stuff the U.S. isn't feeling yet?
That's a really key question, and it actually leads us perfectly into this, well, almost bombshell news out of India. It might explain some of that hesitation and definitely some of the wild market moves we've seen there.
You're talking about Jane Street.
Exactly. The big story. Jane Street, the global trading giant, banned from trading in India. And honestly, for a lot of traders, maybe including you listening, this might actually sound like good news.
Oh, absolutely. I think many are breathing a sigh of relief. The reasons being cited, well, they point straight at alleged market manipulation.
Okay, tell us about that.
We've just been seeing some truly extreme volatility. I mean, things you didn't used to see regularly at all. Get this. A nifty 25,300 put option, trading at like 75 pesos on 1 rupee.
Wow.
Suddenly shoots up to 18 rupees. Another one, the 25,400 put, goes from 3 rupees to 48 rupees. Incredible jumps.
That's insane volatility.
It is. And like I said, this used to be a real outlier event. But recently, it feels like it's happening almost every other day. And there's been this really sort of weird behavior with option prices, too.
How so?
Well, sometimes the main market index goes up, but put option premiums, which should logically fall, they actually rise.
Okay, that doesn't sound right.
No, it doesn't. And the suspicion, the alleged mechanism, is pretty concerning. It sounds like massive buying of put options, huge quantities, to deliberately inflate their prices. Then, maybe after the market drifts a bit higher, they allegedly engage in basket selling.
Basket selling.
Yeah, basically dumping a whole load of different stocks or derivatives all at once, specifically to force the market down sharply.
Yeah.
And we saw things that look like that. Remember Nifty falling over 200 points from its high 2 days in a row?
Yes, I do. Seemed to come out of nowhere.
Exactly. No obvious news trigger for such a big, sudden drop.
So how did this Jane Street connection even surface?
Well, the story goes, and this is quite something, apparently a lawyer mentioned Jane Street's plan by mistake during a completely unrelated U.S. court case.
Seriously? A slip-up?
Seems like it. Otherwise, who knows how long this alleged manipulation might have continued undetected. The hope now, I suppose, is that taking action against a big player like Jane Street might make other aggressive funds, slow down a bit, or at least think twice before trying similar tactics.
Right. Or risk the same thing happening to them.
Precisely.
Okay, let's talk money then. The financial side of this. Jane Street's reported profits were huge, weren't they?
Massive. The numbers cited are $1 billion 2 years ago, and then $2.3 billion last year.
So that's $3.3 billion in 2 years.
Correct. And the source we looked at really frames this as essentially a loss for Indian retail investors. That money, arguably, came out of the pockets of smaller players in the market.
And there was that point about the RBI and taxes.
Yes, the report alleged that the Reserve Bank of India, the central bank, supplied the U.S. dollars needed for these profits to be, presumably, repatriated. And crucially, it claims this happened without any tax collected at source, the TCS.
Which is usually required.
Typically, yes, on certain transactions. It's meant for transparency and government revenue. The implication is that these billions could have left the country without the usual tax oversight.
Wow. So beyond the immediate trading impact, what does this whole episode mean for, market fairness for the average investor trying to participate?
I think that's the core issue here. When you look at the bigger picture, it really throws a spotlight on market integrity. If put options can be artificially pumped up like that, retail traders using options are basing decisions on, well, false signals.
Yeah, completely distorted.
And then, if the market is deliberately pushed down by huge sell orders, those same retail folks often get caught out, right?
Yeah.
They lose money while the alleged manipulators potentially profit from the swings they created. It just highlights this constant tension, between these giant institutional players with huge resources and, well, everyone else, the retail participants. It shows how tough the job is for regulators trying to keep things level in such a complex, interconnected global system.
Okay, so let's bring it back specifically to the Indian market, to Nifty. It's really striking, isn't it? U.S. markets setting records, but Nifty is, as the report said, nowhere near its own all-time high.
Yeah, quite a diversion.
And it had that unwarranted correction last week down 150 points. So connecting the dots here, is the thinking that maybe this alleged Jane Street activity actually caused or at least contributed to Nifty struggling like this? While the U.S. powered ahead, what's the current state of play for Nifty?
That's certainly a very plausible theory people are discussing. I mean, if you're artificially driving the index down without real news, that would absolutely explain an unwarranted correction and underperformance. Right now, Nifty seems to be in a kind of consolidation phase. It's struggling to push higher, maybe because of these effects or just general caution.
Right.
But importantly, it's also not really breaking down significantly lower either. It's holding.
Okay.
For the coming week, the expectation is probably for Nifty to trade in a range, say, between 25,000 and 26,000. We'll likely see the highest open interest, the most contracts outstanding cluster around the 25,000 puts and the 26,000 calls.
Even though the premiums are low, you mentioned the 26,000 call was cheap.
Yeah, premiums have really collapsed. That 26,000 call is only about 15 rupees, which is very low. It suggests less conviction about a big immediate move upwards. The really key thing to watch is whether the bulls can defend yesterday's weekly low. That was around 24,400.
Okay, 24,400 is the level.
Yes. If that level breaks, especially with the U.S. market still looking strong, that wouldn't be a great sign for India. It would suggest underlying weakness. But, there's also this general expectation of a breakout coming, maybe after corporate results start rolling in more heavily.
Right. Earnings season could be a catalyst.
Exactly. So if the market manages to open, say, flat or just slightly positive, there's definitely potential for a decent rally to start building.
Any specific stocks looking interesting in this context?
Well, HDB Financial has been doing really well. It's up about 100 rupees on listing day, then added another 30, 40 rupees yesterday. So strong momentum there. And also keep an eye on Bank Nifty and the financial services sector generally. They've kind of underperformed recently.
Yeah, they have.
But given the overall market setup, they might actually be poised for some outperformance today, perhaps playing catch-up.
Okay, so quite a lot to unpack today. We've covered the split between global markets, the really significant Jane Street ban in India, and its potential impact on market fairness.
Huge implications there.
And how all that might be feeding into Nifty's current sort of holding pattern and the outlook there. Understanding these connected forces really is the shortcut to, getting a clearer picture of what's driving things.
It really is. And it leaves us with a pretty important question to think about, doesn't it? In this world where all our financial markets are so tightly linked, how does an incident like this Jane Street ban, how does that ripple outwards? Does it affect trust not just in India, but maybe in global markets more broadly? And maybe what responsibility do we as individual investors have to try and understand these less obvious forces, the stuff happening behind the headlines, something for you to mull over?